Hello students, welcome to Accounting 1303, Introduction to Accounting 1. In this lecture, we are going to be covering content from Chapter 8, which deals with payroll accounting, employee earnings, and deductions. I am Dr. Claudia Mercado, and I will be going over, in this particular lecture, Problem 8-9A. As a friendly reminder, before you begin working on any of your assignments for the week, please make sure that you read the chapter in full. A lot of information is covered in the chapter, examples are provided, so on and so forth. In addition, there's PowerPoints posted on Blackboard. Please make sure that you review those PowerPoints as well, as very important information and examples are also included in there as supplemental resources for you. Okay? Now, before we begin covering the problem, this particular problem entails completing a payroll register. Okay, you will see this on your exam. You do need to learn how to complete a payroll register. That is why I'm taking the time to explain it to you. Now, the payroll register is not complicated, but it is a long process. Okay, so it is going to take us a little bit of time to complete it. Now, it's the same thing for every employee. The only thing that changes is the time of hours that they work, the pay, the deductions that they have, so on and so forth. But the concepts are the same. So, what is a payroll register? A payroll register is basically just a form used to assemble the data that is necessary each payroll period to be able to process your payroll. So, we have an example here of the payroll register. We have a list of the employees, their withholdings, these are the number of dependents that they have, their marital status, whether they're married or single, and then we have a whole bunch of information that we are going to have to calculate, okay? Now, once we get into working, like for example, if you're majoring in accounting and we start using QuickBooks, for example, all of this is auto-generated. We don't have to do much of the manual calculations. But for purposes of this class, we are learning the manual process. We do need to ensure that we do know how to calculate how are all these figures being calculated. So that is what we're going to be learning. Okay, once we know the background behind it, how everything is calculated, then we can transfer that information or that knowledge over to actually applying it to a payroll system. Okay, so let's look at the problem that we're going to be covering. We're going to be covering problem 8-9A. It deals with completing a payroll register and doing the necessary payroll journal entries. So we have Mary Locke. She operates a travel agency called Mary's Luxury Travel. Okay. She has 5 employees, all of whom are paid on a weekly basis. The travel agency uses a payroll register, individual employee earnings record, and a general journal. Mary's Luxury Travel uses a weekly federal income tax withholding table like the one found on Figure 8.4. The payroll data for each employee for the week ended March the 22nd is given below. Employees are paid time and a half, the regular rate for working any hours over 40. And then we have a list of the employees, their number of allowances, their marital status, the number of hours that they work for that particular week, their pay rate, and the cumulative earnings. That amount is what they have earned year to date. Okay? Then they give us additional information. Social Security tax is withheld from the first $128,400 of earnings at a rate of 6.2%. Okay, so what does that mean? That means that employees are only going to pay taxes, Social Security taxes, on the first $128,400. If an employee makes more than $128,400, then anything over that amount is not taxable for Social Security tax purposes. Now, for Medicare, the Medicare tax rate is 1.45%. Now, Medicare does not have a cap like Social Security. Okay, so we're going to charge that 1.45% on all of the earnings. Okay, it mentions that Bacon and Leung have a $15 withheld, and Cole and Hicks has $10 withheld for health insurance. Okay, Bacon and Leung have $20 withheld to be invested in the travel agency's credit union. Cole has $38.75 withheld, and Hicks has $18.75 withheld under a savings bond purchase plan. Mary's Luxury Travel's payroll is met by drawing checks on its regular bank account. The checks required, okay? So we are being required to prepare a payroll register for the week of March the 22nd. It says here, in the taxable earnings unemployment compensation column, enter the same amount as in the Social Security columns. Whatever we calculate in the Social Security columns, we're going to enter those same amounts under the taxable earnings for unemployment compensation purposes. Okay. So that's just something to keep in mind when we are doing our payroll register. Once we're done entering all of the data, we have to total the amount columns, verify the totals, and rule with a single and double line. Okay. So this is the information that we have. I created kind of like a little Excel template of what we have to fill in. Okay. So I'm going to go ahead and I'm going to do Andrea very slowly with you. Okay. And I'm going to do it quicker as I go, as I progress, because I'm not going to take, if I were to explain every single number with you, it's going to take me hours to cover. Okay. So, well, you know what? Let's just go work downwards. That way, it's just easier for me. I think it'll be easier. So, first, let's calculate our regular pay. Okay. So, we're going to be looking at, and you can do this either way. Either work down each of the columns or work across. I'm just going to be working down. That way, I can get rid of each of the columns as we're going. Okay. We still have to calculate or complete the entire spreadsheet, whatever method is it that you choose. So let's look at Andrea. Okay, Andrea works 44 hours, gets a pay rate of $14. Now, on the regular column, we're only interested in the first 40 hours of pay. Let me get my calculator out. Okay, let me put it over here. So for Andrea worked 44 hours. Well, actually, I don't even need that. I'm just going to do the calculations in the cells. So we're doing the regular hours. What are my regular hours? My regular hours are 40 hours. Okay. What is my rate? I'm going to multiply it by $14 an hour. That gives me $560 for Andrea. Now let's look at Andrew. Andrew has 40 hours and the rate of pay is 15. That gives me $600. Now let's look at Melvin. Melvin worked 44 hours, but we're only going to pick up the first 40 for the regular pay, and Melvin gets paid $13.50 an hour. That gives me $540. Okay. Then I'm going to go ahead and I'm going to do Kara. Kara worked 36 hours, and Kara gets paid $14 an hour, so I'm going to multiply. All I'm doing is multiplying the hours times the hourly rate. Okay. And then we have Melissa. Melissa worked 40 hours at $14.50 an hour, and that gives me $580. Okay, so I'm going to go ahead and I'm going to add a totals column. So my regular pay is $2,784. Okay, now we're going to calculate any overtime. Now to calculate the overtime, okay, let me see if it works. Let me see if it works in Excel here. So the first thing that we're going to do is we're going to calculate the overtime rate. Now my overtime rate is my rate, which is $14 times 1.5. Okay. Once I do that, I'm going to multiply that number times the number of hours that we have overtime. The number of hours that we have overtime is 4. So remember, the first 40 hours are regular. Anything over 40 is overtime. So in this case, we have 4 hours of overtime for Andrea. Okay, so I'm going to multiply it by 4 hours, and that will give me $84. Okay, that is correct. Now we look at Andrew. Andrew did not have any overtime. Andrew only worked 40. Okay, now let's look at Melvin. Step number 1, we calculate the overtime rate. How do I calculate the overtime rate? The regular rate times 1.5. Okay. Once we do that, we multiply that by the number of hours over the 40. We have 4 hours. That's going to give me $81 of overtime. Okay. Kara did not have any overtime, and Melissa did not have any overtime. Okay. So now the amount of overtime that we paid out was $165. So now we've calculated the regular pay, the overtime pay. Now we're going to get the total. To get the total, you simply get your regular pay plus your overtime pay, and that will give you your total. Okay, you bring that down, and it automatically fills it out for you. So all you're doing is adding your regular plus your overtime, and that gives you the total. Okay, so that was fairly quick there. Now we're going to get the cumulative total. Now for the cumulative total, what we're going to do is we're going to pick up from the information given in the problem. They're giving you the cumulative amount given there. Okay, so for Andrea, we have $6,300, and I'm going to add that number given plus the total that they earned this pay period, which was a $644. Okay, that gives me $6,944. Okay, for Cole, I'm going to get $6,150 plus the $600 that they earned that week. That's going to be $6,750. For Melvin Hicks, I'm going to get the $5,805, and I'm going to add the $621 earned this week. For Kara, I'm going to get the $5,600 plus the $504 earned this week. That gives me $6,105. And last but not least, we've got Melissa. Melissa had a cumulative of $5,945. We're going to add the $580, and that gives me $6,525. So we're going to get the total of the cumulative. We add up all of those numbers, and let me see. Escape. So let me do this. Equals the sum of everything here. Oh, let me see. Right there. There we go. So my total is $32,749. Okay. Let me go ahead and put some commas. That way it's easier to read. There we go. Okay. So the $32,749 includes the pay from this week's paycheck. Okay. So it's the pay before the earnings from the 1st through March 15th. Okay. Plus whatever they earned this week. Okay. Now for the unemployment compensation, remember on the notes it says that for the unemployment compensation you're going to enter the same amounts as your Social Security column. Okay, so we need to figure out the Social Security column first. Okay, now for the Social Security column we have to figure out the taxable earnings. Okay, excuse me. This is not the amount of taxes. This is how much of what you have earned this week is subject to be taxed. Okay. Now, let's look over here at the data. It says Social Security tax is withheld from the first $128,400 of earnings at the rate of 6.2%. So, we are responsible to pay Social Security taxes on the first $128,400. If we make more than $128,400, then no further taxes need to apply. So, what we're going to do is we're going to figure out here on my Social Security, and this is Social Security, and I'm going to put here Social Security taxable earnings. That way we know. And this is going to be taxable earnings. Okay. So for my Social Security taxable earnings, we're going to look at our cumulative pay. And you're going to ask yourself, are any of my employees above the $128,400 threshold? And the answer is no. None of my employees have reached that limit or that cap of $128,400. So what does that mean? That means that everything that they have earned this paycheck is going to be taxable. So that means that everything that they earned this week, I'm just going to copy it and paste it over here. Okay? I'm going to copy, Control copy, and I'm going to paste as values. There we go. Okay, so what does this tell me? This tells me that I am responsible to pay taxes on the entire wages earned this week. Okay, everything that I have earned this week is subject to be taxed for Social Security purposes. That is what it means. Okay, so in this particular scenario, none of my employees had gone over the cap of 128. So that means that until I reach that cap, I am going to pay Social Security taxes. Okay. The instruction said, whatever you get for Social Security, copy it over for unemployment. That's what we're going to do. Okay. That's what the instruction said. So now that we have the Social Security taxable earnings calculated, we've copied that over to the unemployment compensation taxable earnings, we can begin calculating our actual taxes. Now the first tax that we have is the federal income tax. Okay, now let's look at what the problem talks about dealing with federal income tax. Okay, so it says here, where did I read it? Over here. Mary Luxuries Travel uses a weekly federal income tax withholding table like the one found on figure 8.4. Okay, so I've got the table down here. Okay, so what are we going to do? Okay, and I'm going to show you maybe the first two and then we'll take it from there. So we're going to look at Andrea Bacon. Andrea has earned $644. It's married filing joint, so she's married. Okay, and let's go ahead and let's see what that is. Okay, so we're going to be looking at the married filing joint, and how much does she make? $644. Okay, so we're going to locate the $644 in this table, which is right here in the yellow. Okay, and we're doing the married, so we're going to look at the standard withholding. So that means that we're going to withhold $11 for federal income tax. Okay, $11 for federal income tax for Andrea Bacon. Now let's look at Andrew Cole. Andrew is single and earned $600. Okay, so now let's look for $600. Okay. Okay, here we are from 595 to 605. Okay, and we're doing single. Single is the last set of numbers. Okay, so we're gonna do 605. Okay, now remember it says at least but less than. So what number we're looking? He made what, $600? Yes, $600. So we're gonna be looking at the $600 limit right here. If we follow it across for single, it will be $36. Okay, so we're going to be looking at the standard deduction for single individuals. Okay, so we're going to go ahead and we're going to do $36. Now for Melvin Hicks, Melvin earned $621 for the week, and it's married. Okay, Melvin is married, so we're looking at $621. So we're going to look at $621. Okay, $621 falls right here. Married, it's the first set, so that will be a $9 withholding. Married, $9. Okay, so we're going to do the $9 right there. Okay, Kara Lung is single and earned $504. So when we're doing single, make sure that you look at the second number from the end. That's your standard. Okay, and how much did Kara made? $504. So let's look for $504. Okay, so we are looking right there. Single, it'll be $24 for Kara. $24. So we're just looking at the table, and that's where we get the numbers. Okay, Melissa is married and earned $580. Okay, so let's look at $580 for Melissa. $580 falls right here, and we're doing married, so that will be a $5. Let's see, are they married? Let me see. Melissa, yes, married, filing. Oh, she's married, filing separately. Okay, so this one we need to be careful. Married, filing separately, $580. Okay, so $580, $580, $565, $580. Okay, so for the married filing separately, we're not going to do the standard. We're going to go ahead and do the second number right here where it says a Form W-4 Step 2 checkbox withholding. Okay, or we can do the married filing separate over here. Let's see if that gives us to us. Let me see. How much was it? $580. Okay, so $580, $575, $580. Okay, right here. So we're going to be using this 33 right here. Okay. Because we are using the married filing separate. So make sure that we read over here, married filing separately, and it's going to be the $33. Okay, so we're going to do $33. That is the only employee that is married filing separate. Be very careful with your marital status. Okay, so we're going to add those together. Our total federal income tax withheld is $113. Okay. Now we're going to do our Social Security tax. Okay. Our Social Security tax is 6.2%. Now these tax rates and these limits, they change every year. Okay. So the government is constantly updating them. Okay. So this is, of course, an older textbook. These are not the up-to-date information, but we're going to be running with this information provided in the book. Just make a mental note that every year these change. Now, the Social Security tax rate and the the Medicare tax rate have not changed. The only thing that has changed is the Social Security cap. Okay, but the rates have remained fairly constant. Okay, at 6.2% for Social Security and 1.45% for Medicare. Okay. So for my Social Security, I'm just going to do a little, just for reference. That way we know my Social Security tax rate is 6.2%. Okay. My Medicare tax rate is 1.45%. Okay. That way we know those are the tax rates. Okay. So what am I going to do to calculate my Social Security tax? Well, what I'm going to do is I'm going to get my earnings. How much did I make this week that is taxable? We're going to look at the Social Security taxable earnings, and we're going to pick up that amount. That means that we have $644 that is taxable for Social Security, and I'm going to multiply it by my rate of 6.2%. That's going to give me taxes of $39.93. Okay. For Andrew, I'm going to get my Social Security taxable earnings of $600. This is what I made this week, regular and overtime, if any. And I'm going to multiply it by my rate of 6.2%. Okay. That will give me $37.20. Okay. Now we're going to do Melvin. Melvin earned Social Security taxable earnings of $621 times the rate of 6.2%. Okay. That is going to give me $38.50. For Kara, I'm going to get my Social Security earnings of $504 times my rate. And that's going to give me $31.25. And then last but not least is your Social Security taxable earnings of $580 times your rate. Okay. $35.96. So we add them together. And that gives me Social Security tax of $182.84. Now these amounts represent the actual tax that is going to be withheld from each employee for Social Security tax purposes. Okay. The Social Security taxable earnings column tells you the amount of the payroll from this week that is subject to be taxed. And for all of the employees, everything that they earned is taxable. Okay, so that we're basically just copying the total that they earned over here because none of the employees have gone over the cap provided of $128,400. So that means that everything that they earn is going to be taxed. So we get the amount that they earned this particular week. We multiply it times the rate of 6.2%, and that gives you the amount of the tax to be withheld for each of the employees. Now for Medicare, Medicare is subject, any earnings that you have is subject to be taxed. There's no cap on that, okay, at a rate of 1.45%. So for Medicare tax, we're going to always pick up your total pay, the total pay times the rate. Okay, so the reason we pick up the total pay is because this one does not have a cap. The reason that we have a Social Security taxable earnings column is because there we do any calculations of how much of this week's pay is subject to be taxed. Now, this problem is fairly easy. All of the employees are not making close to the cap, so everything that they make will be taxable. Medicare, you always pick up the total and you simply multiply it by the rate of 1.45%. Okay? Or whatever rate is it that the government has established that particular year. Okay, for as of right now, the rate is 1.45%. Okay, so you just get the total pay times the rate of 1.45%. Okay, And that is how we calculate our Medicare tax. We multiply it by 1.45%. Once we have that, we tally it up. So from the employee's paychecks for Medicare tax purposes, this is the amounts that we're going to withhold for each of the employees. Okay. Now let's see what it talks about for the city tax. Okay. Now the city tax varies. Not all cities charge taxes, but in this particular problem it does. It says city earnings tax at the rate of 1%. So the city tax is 1%. That's given in the problem. Okay. So let me go ahead and put the rate over here. So the city tax is 1%. So we're going to go ahead and we're going to get the total pay, whatever you earned, times the 1%. Okay. Your total pay times 1%. Okay. You see, not very complicated math. Just get the total pay times the 1%. The total pay times the 1%. Okay, make sure that you pick up the total. That includes your regular pay plus any overtime pay. Okay, and that's it. And then we're going to get the total. So we're going to collect $29.49 on city tax. Okay. Now we are going to look to see who it has health insurance. Okay. So let's look at the problem. Okay. Now that is given somewhere in the bottom. Okay. It says Bacon and Loong have $15 withheld, and Cole and Hicks have $10 for health insurance. So Bacon and Loong have $15. So let's look at Bacon, $15, and Loong, $15. Okay. And then we have, who else do we have? Cole and Hicks, $10. Cole, $10, and then Hicks, $10. Okay. And then this last one, Melissa has no health insurance. Okay. So these are the deductions for my health insurance. Okay. Now these are voluntary deductions. If you want to purchase health insurance, then you do. And these are the deductions for the health insurance. Okay. Then we have another category. Okay. Now that information is also given to you in the bottom. Okay. It says here, let's see what it says. Bacon and Loong have $20 withheld to be invested in the Travels Agency Credit Union. So we have Bacon and Loong with $20. Okay. So we have Bacon and we have Loong. Okay. And the amount for both is $20. Okay, and then what else does the problem say? So Bacon and Loong have $20 withheld in the travel agency's credit union, and then we have Cole has $38.75 withheld, and Hicks has $18.75 withheld for savings bonds purchase. Okay, so we have bonds for Cole of $38.75. And we have bonds for Hicks of $18.75. Okay. So that gives me $97.50. These are additional deductions. These are optional. These are not required, but the employees have decided to have these amounts withdrawn. Okay. Now comes the fun part. Okay, how much is our employees going to take home? What is their paycheck going to look like? Well, what are we going to do? We're going to start off with the total pay. That is what they earned. Okay, so they earned $644, the total pay. From the total pay, I'm going to start subtracting my taxes. Okay, And let me go ahead and let me color code them, okay? Now these are my taxes or my deductions. Those are the amounts that I'm going to be looking at, okay? Federal income tax as well. There we go. Okay. So these amounts are the deductions. This is what is being withheld from your paychecks, okay? So we're going to get the total pay minus your federal income tax, minus your Social Security tax, minus your Medicare tax, minus your city tax, minus your health insurance, minus your other. That means that Andrew Bacon is going to take home $542.29. Let's do another one slowly. Okay, let's do Andrew. Andrew earned $600. Okay, we're going to subtract the $36 of federal income tax. We're going to subtract $37.20 from Social Security. We're going to subtract $870 for Medicare. We're going to subtract $6 from the city tax. We're going to subtract $10 for health insurance, and we're going to subtract $38.75 for bonds. That's going to leave them with $463.35. Okay. We copy the same formula down. Okay. And this is what we get. Okay. Let me make sure that my addition is right. There we are. Okay. So this is the amount that my employees are going to take home. Okay, that is their take-home pay. The net pay is what they actually take home. So yes, Andrea did earn $644, but after all of the deductions, Andrea only takes home $542.29. Now the problem said to start with check number 423. Now, when we start with the check number, we follow the next sequence: 424, 425, 426, and 427. Okay? These are the check numbers that we're going to assign to these checks that we're going to cut to our employees. Okay? So now we've calculated. Okay? Oh, and I forgot. I skipped one thing here. Let me copy these over here. Well, that would have made it much easier. Never mind. Let me retrace my steps. Okay, let me recalculate my net pay. That is how you do it. But in the actual form, we have a total column that I had skipped to calculate. Okay, now that total number is your total deductions. And that just makes it a lot easier. How much am I taking away from your paycheck? Well, I'm taking away federal income tax, Social Security tax, Medicare tax, city tax, health insurance, and other. Okay, I add everything that's going to be deducted. Everything in orange, I'm going to add them. That represents the amount of your deductions. Okay, you do the same thing for each of the employees. You add your federal, your Social Security, your Medicare tax, your city tax, your health insurance, and your other. And that gives you the amount of your deductions. Okay, so we do that for all of our employees. Okay, and that gives us the amount of the deductions. Okay, so the total is how much you took away. Okay, so what we're going to be looking now to calculate your net pay, we're going to be looking at the total deductions and your total pay. Okay, that's what we're going to be looking at. Okay, those two right there in gray. So what are we going to do? We're going to get the net pay minus the total deductions, and that will give you the amount. Okay, the net pay, the total pay minus the total deductions. Okay, the total pay minus your total deductions. Okay, so that's all you have to do. You have to calculate the total pay minus the total deductions. Okay, and just like that, you calculate your net pay. Now the amounts don't change. The only thing I had done previously is done the long route where you get your total minus each of the individual taxes. I forgot that we do have a totals column that I had forgot to fill in. Once you fill that totals column in, that gives you the total for all of these taxes right here, or taxes or additional deductions that we have. So that represents, this column right here represents the sum of all of these amounts. Once you have your sum, you simply get your total less the total over here, and then that will give you your net pay. That is what you're actually taking home. Okay. So this is what the payroll register looks like. Okay. It figures out how much regular pay you have, how much overtime pay you have, your total pay for the week, your cumulative, this is your year-to-date pay, and we need this number, remember, to compare it against our social security cap. If we make over 128,400, anything above that is not taxable. Anything below that, we have to pay the tax. In this particular scenario, all of our employees are below the threshold, which means that everything that they earn is taxable for Social Security tax purposes. Okay. We then calculated all of the taxes. We added the taxes together, the taxes along with our other deductions, and we calculated the total. From the total, we get our total earnings minus our total deductions, and that will give you your net pay. So let me put here total deductions. That way we know what it is. These are my total deductions, and this is my total earnings for the week. Okay. So for the week, this is what I make. Okay. Okay. So now that we have that, that takes care of requirement 1, which is to prepare the payroll register. Now, assuming that the wages for the week ended March the 22nd are paid on March the 24th, we have to prepare the journal entry for the payment. Okay. So now we have a journal over here, and we're going to have to record our journal entry. How are we going to record that we are paying our employees? Okay. Well, first of all, we're going to start off with the date. This is happening March the 24th. Okay. The account is salaries and wages expense. Okay. Now, how much salaries and wages expense did we spend during this week of processing? Okay. For my salaries and wages expense, we're going to look at our total earnings for the week. We're going to pick up that total number down here. Okay. The 29.49, that is my total earnings. That is how much my employees earned this week. So that is the amount for my debit to my salaries and wages expense. Okay. From there, I am going to go ahead and I'm going to put the money that I took away from my employees' paychecks for the different purposes. Now, this money does not belong to me, to the company. No, all we're doing is we're taking the money away from the employee's paycheck, and I'm going to put it into temporary accounts. That way, when I have to remit payment to all of these entities, I just take the money out from those accounts and I make those payments. My responsibility is to ensure that I withhold the money from the employees and that I safe keep that money for when I have to remit payment to the different entities. Okay, so let's begin with the first one. Okay, employee federal income tax, FIT is federal income tax payable. Okay, I'm going to put all of my money into the payables because these monies do not belong to me. I owe this money. Okay, now for federal income tax, I withheld, we're going to look at the federal income tax column. I withheld $113. Okay, so I'm going to go ahead and I'm going to put it as a credit. Remember, a payable is a liability with a normal balance of a credit. I'm going to go ahead and I'm going to credit it $113. Okay, the next one is my Social Security tax payable. For Social Security, I collected $182.84. And let me go ahead and make all of these numbers like that. Okay. So that takes care of that one. And then we have Medicare tax payable. We're picking up the grand totals. How much did I withhold from my employees for Medicare? I withheld $42.76. Okay. Sorry about that. $42.76. There we go. Okay. Then we have city tax payable. For my city tax, I collected $29.49. Okay. Then I have for health insurance. Okay. For health insurance, I withheld $50. Okay. For my credit union, I have two. I have $20 and $20. So I've got credit union 20 and 20. That'll be $40 for the credit union. Okay. For the savings bonds, I've got, let me get my calculator. I've got 38.75 and 18.75. That's 57.50. Okay, that takes care of these two. Okay. And now I just have one less thing. So this is how much my employees earned, $2,949. This is how much I withheld from their paychecks for each of the items. Okay, I am going to have to pay or remit payment for all of these taxes or deductions. You know, I need to pay my health insurance premiums, I need to pay my Medicare tax, so on and so forth. Now we're missing one key component, which is pay our employees. How much cash am I going to pay out to my employees via a check? Well, the cash that is going to get paid out to my employees is your net pay of $2,433.41. Your net pay is the cash that is actually given to your employees. Okay. Now, when you're doing journal entries, the debits must always equal the credits. Okay. I just like to double check, and they do equal, which is great. Okay. Make sure that the debits equal the credits. Okay. If they don't, you made a mistake somewhere in your entry, you need to fix it. Okay. So debits need to equal credits, which they do. Okay. Now this is going to be the payroll for a week ended March 22nd. Okay. So this journal entry will record my payroll for the week ended March the 22nd. Okay. I have acknowledged that my employees earned $2,949 in wages. I deducted these amounts for each of the respective types of taxes or withholdings, and I paid out my employees the remaining balance in cash of $2,433.41. Okay. Without this entry, nothing happens in our books. Now, why do I need the payroll register? Because this is where I'm picking up all of the totals. Okay, I'm picking all of my totals from here. The payroll register is a tool for us to be able to use to be able to do our monthly or weekly entries that we have to do for payroll. Okay, so that is how it happens. That is how you complete a payroll register, step by step. Make sure that you tally up your numbers. Make sure that you're very careful on your calculations, that you are aware of your limits. For example, for Social Security, that your cap is $128,400. That you carefully review the information, all of the information provided. That you are very careful when calculating your federal income tax, that you are using the correct filing method, whether it be married filing jointly, head of household, single, or married filing separate. Okay, that's where students get a lot of confusion. Okay, so that is it for this problem. Please make sure that you review. You're going to have one of these problems in your homework, and you will see this on your exam. So please make sure that you do understand it carefully. If you have any questions or concerns, please do not hesitate to contact me. You can watch this video as many times as you can. I was entering the formulas within the cells. That way you can see, for example, for my regular pay, up here you can see that it's 40 times 14. Okay, you can actually see the actual formula being when I typed it in. Okay, so I hope that this is of use to you. Please prioritize your time and make sure that you have enough time to complete your weekly assignments. And I wish you a wonderful rest of your week. Until next time, have a good day. Bye-bye.